Here with us here in business today, and we're tracking the last day of the year and how markets shape up today. It's going to be super interesting to see what the new year has in store. Today, of course, as Shell has been telling us all week, everyone's on holiday and it's likely to remain quiet. But let's pull up some of the original trends for you, see what happened overnight and how we're sort of set up for the day's trade. Shell with us, of course, as well as Sharad Awasthi, and I'll bring them in just a moment. But pre-opening ticks are showing a little bit of a downward trend, 25972 on the Nifty. Overnight action also slow, and Asia also continuing to be in holiday mood this morning. We've already got the Happy New Year bug on the top of your screen as we count down literally to the new year tonight and hope for a really great 2026 for markets and investing. There you have it. In the pre-open now, just a marginal uptick that we're seeing, 25978. It's pretty steady. We've been hovering around that 26,000 mark now for a while, at least a month or so. We hit those record highs and then have just about stayed steady at those levels. Let me welcome in Shell this morning. Shell, good to have you with us. Last day of the year, and clearly, as you've been saying, everyone is on holiday.
Absolutely, Aabha. I've just polished my party shoes and I'm looking forward to today's evening as far as the plan is concerned for today. Fresh monthly expiry takes root for January, and we have good strong breakouts coming into private banks, public sector banks, commodities, as well as metals. So long trades on that side, quiet on the Nifty. But Bank Nifty looks good because both PSUs and private banks have shown signs of breakout. That's what I'm looking forward to. I'm looking forward to mutual funds looking for December 31st as well as 2025 NAVs to be brighter. So good action on the long side today. And that's what the pre-open is also telling us, Aabha.
All right, fantastic. Let me welcome in Sharad Awasthi as well. Sharad, good morning. Is this a good time perhaps to get into some of those quieter areas of the market? Firstly, let me wish you a Happy New Year in advance. And are you also getting all set to party tonight?
Yeah. Thank you. Good morning. Happy New Year to you and Shelji as well. Yeah, everyone does party on the New Year. So I think markets generally have been a bit volatile during the last 1 year. Not much of gains to talk about. I think since June, July, we are roughly flattish. But I think next calendar year should be much better. Though we were expecting, this calendar year to be much better than how it has panned out to be. But I think the year could be summed up as something that we started with optimism on tariffs and we have ended in a limbo with respect to tariffs. Nothing has happened. So the whole 12 months have passed through. So expecting that next year probably will be better because the undertone with respect to quarterly numbers, interest rates, inflation trajectory, all seems to be supportive of a good strong rally. So maybe the first half or even in the first 9 months you could see some strong rally for the markets.
Okay, so counting on a good strong rally coming in. Shell was talking about banks, but anything else that's going to be on your radar today, Shell, as we head into trade? I am looking at some of those stocks in news, but at this point of time, I'm not sure we're going to see any major reactions. The brokerage calls on Shriram Finance continue to just pour in. It's just shocking how positive the market is on that counter. Today we've got a Nomura saying a buy, Jeffrey saying buy, target price 1200 from Nomura and 1145 from Jeffries. Let me go to Sharad on this. Sharad, this is only just a new slate of buy calls on Shriram. We had a whole host of them last week, then the week before. Morgan Stanley also has an overweight. Their target is 925.
So I think with NBFCs, a strong pedigree plays a very strong role. And with Sriram Group, you already know that the pedigree is strong. You can't expect anything, negative in terms of corporate governance issues or something going totally haywire, as we have experienced in case of some of the finance companies. And there are expectations probably that the CV cycle is also going to be very strong. Now they also have a diversified book. And then with this fresh fund flow coming into it, I think they are placed for a very strong growth trajectory. You could compare this to a cycle with Bajaj Finance experience, when they started growing aggressively. Though the starting price to book multiples might be a bit different. So maybe, a major part of the rally is over for, maybe the next 1.5 year. But long term, I think Shriram is certainly set to get strongly re-rated further from here. Maybe 1 year you would be discounting most of it. But yeah, optimism should continue. I think you have very strong confidence in the management. And with this fund flow in and a strong CV cycle, you can expect growth to outshine. But now don't take fresh entries. If you have it, I think you can continue to hold on for the targets of around 1,000, 1,100 kind of targets. Yeah, seem like favorable for the company.
Okay, so that's the view coming in on Shriram Finance. I'm just going to pull up some of the other recent movers. We've been talking about metals a lot. We've also been talking about BEL, that one also looking confident today. Actually, let me go back to metals for a moment. Silver on MCX has opened with a cut of 6% right now. And remember, we've been talking about that volatility in silver building up. Let's just pull that up for you. It's been trading at records through the year, but currently is seeing a bout of volatility settling in. Shell, let me bring you in on this. 6% cut on MCX on silver this morning.
Yes, Aabha, it's a popular trade. Everybody, his driver, the driver's mother, and anybody is into silver. And that is not how you make money. So, a short on silver is what institutionals are doing to sort of make money on this very popular trade on the long side by retailers, and that's how it is. I would still go for Hindustan Zinc, mainly because silver is 40-45% of their profit, and I'd rather go for MCX on the downtick. That's what I'm looking at. Not long metal after a phenomenal 150% ride in year to date.
Okay, well, talking about MCX, Morgan Stanley's also upgraded it to an equal weight, target raised to 11,135. EPS forecasts have also been raised by 15% and 20% for the following year for FY27. So that's putting the stock at a 35x P and a 5% premium to its long-term average. Sharad, let me get your view in silver, Hindustan Zinc, MCX.
Silver occasionally does do these things over a 15-20 year period, but usually the rallies that we have seen are around 5-6 times from the base. So I think maybe most of it is done. Whether this is the top or maybe 10-15% higher, it's hard to comment. But I think the majority of that rally on silver is over. Regarding Hindustan Zinc, again, it should connote with that silver rally only because major movement was there from the silver part only. So I don't think much would happen there in terms of, and valuations are not comfortable in Hindustan Zinc now. And if silver does correct or even stay here is a difficult thing. I think it could correct. And if it does correct, the steep movements, I think then obviously the expectation of profitability will also take a hit. So maybe HZL does not make the cut. MCX, if these expectations are there, means what we are looking at is somewhere around 45 times next 12 months. But if the numbers are re-rated upwards, I think with new products and the type of fancy that metals etc. are gaining and commodity trading is trading, I think that could be something that could benefit them. But even at these valuations, I think 45-46 times, I would even avoid an MCX.
All right, well, continuing to be the trending topic as the year closes, silver prices and yes, the MCX trade, Sharad saying slightly overvalued, Shell saying still a better pick than silver itself. Opening in the green this morning. In fact, it's a nice solid start above 26,000. I sound almost surprised because I wasn't expecting to see any year-end action. But there's cheer on the street and 0.3% higher. We got metals in action this morning. JSW 4%, Tata Steel 2.5%, Let me just pull up the the triggers for this kind of move when it comes to some of those metal counters, and on the downside you've got a mixed bag there on your screen in terms of where some of the downticks are, but nothing major. It's the metals pack that's actually driving the way, and then you've got a few other names. Uflex is up 4%, Deepak Fertilizers, NMDC Steel, again metals 3-4%, SAIL is up 3%. So I think this has got to do, of course, on the back of the safeguard duty announcement. Let me just pull that up for you. The government's announced the implementation of an anti-dumping duty on imports of non-alloy and alloy steel flat products for a period of 3 years starting April 21st, 2025. JSW Steel moving up on the back of that, SAIL, Tata Steel, Jindal Steel, all up on the back of this in particular. The duty is applicable to hot rolled coils, sheets, plates, hot rolled plate, mill plates. So that's really why you're seeing the reaction coming in across the board on these stocks and a whole host of other products. It'll stand at 12% when imports are made during the April to April period and fall to 11.5% from April 21st, 26 to April 20th of 2027, and then to 11% for the year after. Now, the duty was proposed in August and was subject to approval from the FinMin, and the 200-day period ended on the 6th of November. And the official notification stated that the duty excludes imports from certain developing countries, although imports from China, Vietnam, Nepal will remain subject to the levy. Stainless steel is also excluded from the duty. So we've got like a Nalco and Hindustan Copper, Hindustan Zinc sitting out, but the steel majors are having a great morning. Sharad, let me understand the implications from you as well.
Yeah, I think the steel industry has been crying about these duties being implemented to protect and safeguard their interest from the import flux that we were seeing. So I think it's positive. HRC etc. should be positive for Tata Steel and JSW Steel as well. In terms of valuation, I think Jindal Steel is something that we are looking at. The type of growth we are expecting over the next 2 years. This should outshine the rest of the pack. So there we are looking at targets of somewhere around 1300, 1400. So within these all 3-4 ideas that counters that should benefit from this, I think Jindal Steel is one bet that suits the bill in terms of benefit from this changes also, and also in terms of the type of growth and the valuation comfort. So I think the maximum upside we see is on Jindal Steel from current levels.
Okay, interesting. In fact, Jindal Steel, JSW Steel has been down about 5% this month. Tata Steel has gone up about 4%. Both JSW and Tata Steel have risen about 23 and 27% so far this year. And we are hearing from experts that demand is expected to rise between 8 to 10% now going forward, especially with those prices protected. Shell, let me bring you in as well in terms of some of the steel majors and the kind of reaction we're seeing this morning.
Well, Aabha, one of the most important stocks in this space is Jindal Steel and Power. That should be taken into account. Very, very strong chart there. As also PSU, Steel Authority of India. A very, very sharp breakout happening on Steel Authority after many months. These are two stocks that I have in mind as far as the strength is concerned intraday. But broader markets looking good. Strong advance decline ratio, 1500 shares versus 700 which are in the red. So it's an easy 2:1. As we had pointed out, banks doing very well. Defense counters doing very well. This is the pre-budget rally that is taking root in the market. We have a fresh expiry on the last day of the month, and of course the chance to reset NAVs for not only December, for 2025. So a nice gap up, and let's hope this is a strong trend day and Santa, who's been missing for so long, should be back on Dalal Street. In the same breath, a very happy new year to Sharadji, my very dear friend.
All right, the defense index is up a solid percent or so this morning. I'm just going to bring up BEL because I think that that's also got something to do with it. Let's just pull that one up for you. Yeah, 1.2% on BEL, and I think we've got some brokerage upgrades coming in on that one as well. Or it's been in the news for just constant order book flow. Goldman Sachs buy with a target price of 455 on a BBL. Order momentum, medium-term revenue visibility, reinforcing confidence, and the Q4 pipeline they're saying remains key to achieve their guidance. Let's get a view on BEL from you, Sharad. At these levels, do you think 455 is achievable? Some profit booking before that?
Well, achievable. I think the type of fancy that defense stocks have, the long-term potential is still very much intact with the offset clause and everything kicking in. And I think export opportunities open up a different dimension. Even last year, we have seen record defense expenditure globally. And I think from India, it's, unfolding in a very different fashion. From a non-existent participant to one of the exporters. I think this sector is a real story that the government of India can be happy about. They've turned it around very nicely, and but I think BEL, BDL, they might be fully fairly valued. So when I look at this space, I think I would be happier buying a HAL even at expensive valuations. I think that is a story that has much better moat compared to BEL, BDL. 3 to 5 years, these might be good stories to bet on. But 1.5, 2 years, I think it would be difficult. And if you want to look at a mix and match of things, I think BEML would be our top bet. We are working with targets of around 2500, 2600. So Bharat Earth Movers is something that is a unique mix of construction and mining equipment, partly defense and railways. So I think that's a much better bet compared to BEL at current prices.
All right. We've got a large trade in Privy, 38 lakh shares. That's about 10% equity, worth about 1,000 crore, changing hands at 2,799 rupees a share. So stock is down about 12% right now. Let's pull that one up for you. Previous specialty there. We'll try and find out what's happening there, but it's clearly seeing, a crack on the back of that large deal. Apollo Micro, one of its arms is backed a contract worth about 400 crores for the supply of cartridge explosives to Coal India. Let's pull that one up for you as well and just see how that's reacting this morning to that news. Shell, what else are you spotting?
Well, Aabha, it's 9:23. The first 10 odd minutes of the market have lapsed, and it's looking good on all major indices. So let's hope that this is a trending day. But in terms of all-time highs, well, Shriram Finance, something that you've been harping for a very long while. National Aluminium, something that I've been marking for an intensely long time. And of course, Jindal Stainless, fresh highs there. So please keep an eye out on these ones. In terms of volume busters, you have the fertilizer space. Again, a build up for the pre-budget. Keep an eye out on Deepak Fertilizers, 4.5% higher. Very, very strong volume, already 1.3 times 5-day average. And it's metals, and metals everywhere. Steel Authority already 50% done in terms of volumes. Tata Steel already 43% done in the first 10 minutes of volume. And of course, if steel is rising, then electrode makers are going to do very well, which is HEG and graphite. So this is what is happening in the market as far as trades are concerned on the long side. Aabha.
It clearly is metals all the way. HEG also up about 3% right now. Bharat Forge has also signed a contract about 1,660 crores with the Defense Ministry. So again, the defense action playing out. Let me pull up Bharat Forge for you as well. And then a couple of other smaller deals that are also seeing some amount of traction in the market. But let's look at Bharat Forge, 1.5% there as well. So the defense theme clearly playing out across defense, metals, and I know Cheryl's been talking about banks. Specifically within banks, Sharad, where would you buy at these levels? Because, maybe it's a good time to get in while the market's still a little quiet.
Yeah, I think PSU banks should be raring to go for the second round of rally. I think most of the frontline names, SBI after a long time is talking very aggressively in terms of how they want to grow. So I think that could be one name. PNB, Canara Bank could be names that could do very well. So within the larger PSU basket, you can look at these names. On the smaller names, I think Indian Bank could be something you could continue to look at. I think asset quality, etc., has been good. On the NBFC space, I think something which is focusing more on the microfinance space, etc. I think for a quality name which had good asset quality, I think Credit Access Grameen could be a good name, for targets of around 1500, 1600. Similarly, something like a Spandana could be a good contra bet. On the private banks, I think if you want to take a bit of risk and expect a lot of re-rating, then Henderson could be a good bet for very strong upsides. And on balance, I think within the private sector banks, Axis Bank probably is the most attractively valued. I think that within the banks, I think that could be a preferred bet in terms of margin of safety in terms of valuation.
Okay, that's a good look at some of the banking majors holistically and where they stand right now. Shell, what about the PSBs? We've been going up and down on them. With the whole government, reform agenda on again, off again. It does seem to be on track, but it's only a few of those names that we were looking at, to begin with. And, I think it was Bandhan or Canada, I think I'll just have to look that up, which recently also talked about some amount of restructuring. But where within the PSB bank would you find value right now?
Aabha, you're asking about PSU banks, right?
Yes.
Did I hear you correctly?
Yes.
Okay, so absolutely Canara Bank, Bank of Baroda, State Bank of India, they look really, really good on the medium term prospects, cleaner balance sheets, valuations which are relatively lower than the private sector pack, and of course we have the run up to the pre-budget. The government is wanting a mega merger within PSU banks, and more importantly, there is a very strong tailwind, which is credit growth in PSU banks is higher than those of private sector banks. That is what is the broader theme, and they've corrected. So, time to get in.
Okay. In fact, Bandhan Bank completed a significant asset restructuring transaction by selling almost 3,200 crores of NPAs to ARCIL, that's the asset reconstruction company. And this is to help the bank's asset quality and strengthen its balance sheet as well and remove stressed assets from its books. So that's the latest on Bandhan. This came out this week as well. So that's on some of the banking names. Sharad, let me just get your top picks before we let you go for the day.
I think currently we are looking at Acme Solar as a good idea. That seems like a good bet to have within the small cap space. They have a robust capex over the next 2 to 3 years. So what we are expecting is that the earning, acceleration could be very fast. And once that happens, I think they should also benefit from the valuation uptick that they see. The stock has seen a bit of correction. So I think Acme Solar could be a good bet to have. Long-term targets are much higher, but initially I think it could work with targets of somewhere around 350.
Great. All right, Sharad, thanks so much for joining us. And let's pull up the index again. Shell, it's a fantastic morning. We've got a really nice spike coming in on that chart. And it's looking like a very strong year-end move. So I don't know about everyone being on holiday, because clearly they're partying here as well on market opening.
Well, Aabha, it's my green shirt. I would believe that's the reason. And the color that we are twinning on is bright pink. And that's, I believe, the catalyst that is adding to this wonderful, wonderful day that's spanning on Dalal Street. Let's hope that this cheer and this luck steps into 2026 as well for all our viewers and all our investors. But the pre-budget run-up, ladies and gentlemen, is a reality for the market. So fertilizers, PSU banks, defense counters, railway, it's a good start.
Okay, let me welcome in Gaurav Sharma as well. Gaurav, good morning. Nice start above 26,000, 0.3% high on the Nifty. And it's not autos today. It's a whole bunch of different names that are actually driving the action. Let me get a take from you on the market first.
Hi, morning, Aabha. Thanks for having me today. So yes, I think the New Year's cheers have already started here. We are on for a good start. We are sustaining above 26,000 odd levels. A reversal sign is clearly visible, at least in the intraday today. Let's hope that this holds on
Yes,
till the
Mr.
end of the
Naidu.
day, and we open a strong on the first trading day of the new 2026 year as well. Now,
हाँ भाई कर रहा हूँ. फोन
when we
लेता
talk
हूँ.
about specifically of index, going ahead 26,050 level holds a vital key for a near term up move towards 26,200. 26,200, 300 are the immediate resistances that we are eyeing at. Apart from this, Bank Nifty has to play a vital role going forward. Formation wise, it is much stably placed. It has consolidated in a better and a subtle manner when compared with Nifty index, and I think it is all set to lead the 2026 up move.
And talking about banks, Gaurav, let's go deeper into that because, yes, going long on banks altogether, but also some of the value to be found in public sector banks ahead of the budget and ahead of the reform agenda as well.
Well, absolutely. PSU banks have been our top favorites all throughout the year. We have been betting heavily and recommending the same to our clients. So it is a general disclaimer before I come out with the names that our clients would be having positions in some of the PSU banks that I'll be naming. Canara Bank remains our top favorite, followed by State Bank of India and Bank Baroda and PNB in that order. Apart from this, I find real good value in Indian Bank as well. So these are some of the PSU banking names that we prefer. Apart from this, some of the smaller private sector banks like Karur Vysya Bank, like City Union Bank have also done well. Their performance has been really steady, and they have created good value for the investors. And I think the performance will continue in 2026 as well.
9:32, ladies and gentlemen. Let's look at the broader markets at this point of time. The first 15 minutes have lapsed. The first 15-minute candle on the Nifty is holding strength above 26,000. Now look at it from the point of view. This is the first day of the January monthly expiry that has begun. So strength. This is the last working day of December as well as 2025, and mutual funds will do their best to get a good NAV as a swan song for the quarter, the month, as well as the calendar. So that is strength coming in, and it's driven primarily by the Nifty PSU banking index and broader indices in general. So look at the Nifty PSU banking index at this point of time. The top performer for us at this stage, you have strength, which is now roughly 2 to 1.5%. Metals in top shape, 1.2% higher, and of course today the mid cap select index is doing pretty well. The Nifty Bank is doing pretty well, and on holiday, ladies and gentlemen, is the Nifty IT index, flat, down 31 points. Aabha.
Yes, totally not participating. Auto's taking a breather as well. It's a couple of those segments. Let's talk about defense, Gaurav. A lot of action there. We've got, you know, names like Bharat Forge, BEL, a whole bunch of names across the defense index, up about 1.5% today. So clearly, order buzz, keeping some of those stocks elevated. Given the kind of traction we've seen this year, though, how much more upside do you find in some of these defense names? Is it a pre-budget move again, as Shell was also pointing out, about 1.5%, 2% up on all the stocks today?
Certainly, Aabha, and rightly pointed out by Shalinji as well, that it is the pre-budget move that we are witnessing within the defense pack as well as the railway pack. They both have started in tandem, and I think the move started on the same day. So some of the defense stocks have really done well, and we expect them to perform better as well. Bharat Electronics is one of those. Mazagon Dock is the other. We expect from a 2 to 3 years time perspective, Mazagon Dock has all possibilities to outshine because it will be getting a larger chunk of contract from the Indian Navy for building frigates and submarines, which we have seen in the past as well. Apart from this, HAL is also at a sweeter spot. It has not performed off late, and the kind of modernization contracts of whether it is Tejas or the MKI Su-30 will probably go to HAL only. So I think these three are topics, and they are more likely to perform in a better manner when compared to others. So we remain thoroughly bullish on all three of them.
$9.36, ladies and gentlemen. It's a nice shade of green as far as the markets are concerned. A bit of profit booking at this point of time. Advanced decline ratios, Aabha improve dramatically. 1877 shares in the green versus 642 that are in the red. So it's an easy 3:1. For every one share in red, there are 3 that are gaining ground. And from the 19 indices that we track, only 1 is in the red, all 18 in the green, led by the metals index. As Aabha has been pointing out, change in duties on customs side to prevent dumping of this commodity in the markets. Apart from that, strength coming into the entire PSU banking setup. Look at IFCI, 7% higher. Look at the railway company RITES, 7% higher. IRCON, 4.4% higher. You have strength in BEML, BEL, BDL, HAL and Mazagon from the defense space. So the pre-budget rally now taking root on Dalal Street in the last week of December, and of course just a month ahead of the annual budget which will be on 1st of Feb.
Loving the move across some of these defense names. It's really looking good this morning. Let's also pull up those steel majors. Let's also take a look at the move there. And that's, of course, on the back of the new duty that's been slapped on by the government of up to 12% on some steel flat product imports for 3 years. So, Gaurav, that's leading to a huge up move on the likes of JSW, Tata Steel, SAIL, and so forth this morning. Jindal Steel also up about 3.5% right now. What are you finding attractive from the steel pie? JSW up 4.5%.
Now, Aabha, it is really difficult to find a better of a steel stocks because they have all performed really well. So the choice gets difficult with every passing day. Previously, it was National Aluminium and Hind Copper leading the way, and now it is the entire from the larger names like the JSW Steel, like the Jindal Steel, like the Tata Steel. They are also performing exceptionally well. A smart breakaway gap up move seen in all the mentioned stock, and it is actually the outcome of the news that you have rightly pointed out. So it is actually difficult to select one out of it. Although I find a good amount of value in some other names like GMDC and NMDC. These explorers are also on a very good space. They have not performed that much when compared to other metal names. So there is a good scope of an up move still remains in these. NMDC, when we talk about sweet up move towards 100, 113, 115 odd levels is pretty much possible. As far as GMDC is concerned, it has fired up too much and still it is looking upbeat, and I think a smart up move towards 650 to 700 zones is pretty much possible in the immediate near term itself.
And metals. Aabha, the sell-off in silver, let's just call it profit booking, is now worth 7% today. Look at the year-to-date gain. 1.5 times is what the silver futures as well as the metal has appreciated in the last 12 months. So a bit of profit booking is necessary. Look at gold, 65% higher, in year to date. And of course, you have rallies which are now getting stronger in copper. So look at Hindustan Copper. If you're looking at aluminium, up 17% a year. Look no further than Hindalco and National Aluminium. And it's the underlying metal which is driving the stock up, because that's how it works in the commodities cycle. It's a global bull market there. One has to be very, very careful at this point of time as far as fresh longs are concerned. Please, please, please be very careful on metals for 2026. Aabha.
Gaurav, what do you say on the metals pie, and what the strategy should be in light of what Shep just pointed out?
I think we need to be really selective now as far as metals are concerned, especially when we are moving in fresh. To those who are actually holding it and they are sitting on some gains, it is time to take some profits off the table, book some partial profits, and trail your stop losses upwards, and actually keep trailing them, because especially for the swing traders who park their money for 3 months, 6 months time frame, they have already made good chunk here. And going forward, it is at best to wait for a decline to take a fresh entry. These stocks may take a pause, because what we have seen of late in the defense pack, in the railway pack, they have rallied too much in one single year, and post that 1.5 2 years they are consolidating, and people are stuck with their investments out there. So I think this is the kind of a similar move that we are witnessing within the metal space now. So I advise, we are advising our clients to be a little cautious now, heading towards 2026. Book some profits here. The choice gets difficult every day, as most of them have rallied in over 50-60% in a year's time frame.
All right, fantastic. Gaurav, any top picks you'd like to leave us with as we head into the new year?
Absolutely. For 2026, we as a house, Globe Capital, find the auto ancillary space really attractive. Some of the auto names are likely to outperform, namely Force Motors. We are very much optimistic on this company, and we see the next 2 quarters this stock should perform really well. Apart from this, from the ancillary space, we find Pracol, we find Fame Industries, Minda Corp to be really attractive bets. Apart from this, the mid-cap IT is on a sweeter space. Persistent, Coforge, they are also doing well. We like them specifically due to the declining rupee dollar ratio, which is in their favor actually, and a 12 to 15% guidance that these companies have posted for the Q3 and Q4 as well. Apart from this, yes, we remain bullish on the NBFC and PSU banking space. I have already named out of them. PSU banking, the NBFC says I am waiting for an up move within the housing finance companies like PNB Housing Finance, Aadhar Housing. They should perform well from the middle of next year. So these are some of the areas where we are really bullish at.
All right, Shell, closing comments from you?
Well, Aabha, we've had a very painful 2025. Investors have actually realized what markets are all about. It's not always momentum. It's not always 20% a month. It's a slow drudge as far as long-term gains are concerned. So 2026, I'm looking forward to a continuation as far as markets are concerned on the long side. And let's hope that you get 12-15% on the Nifty from 26,000. And I'm looking at a reversal in mid caps and small caps, and I'm looking forward to the budget.
Fantastic, gentlemen. Thanks so much for joining us, and looking forward to everyone enjoying New Year's Eve and getting back to action.
Thank you.
After. That's all from us this morning. Thanks so much for watching.